Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
All right, guys, welcome to episode 26 of the Collecting Keys Real Estate Investing Podcast.
Did you just say 26? Are we going backwards?
Episode 36 of the...
Dang.
I literally just said that before I went live. I was like, episode 36. Episode 36 of the Real Estate Investing Podcast.
It's been a week, man. I get it. It's been
like a couple weeks because we kind of record these in batches. Yeah. So it kicks it out a little bit, and I always have to go back and see where we actually are. But we've had I guess since we've recorded last, the market has officially started to shift a little bit. You can kind of see it. A lot of people are talking about it right now as, you know, interest rates have been climbing. We've known it's going to slow down, and I think the slowdown has officially started. We just had a property that we listed, and we sold it in like a week, which is fine. Haven't taken offer a little bit below ask. But there's been reports of people dealing with similar sort of situations all over the city, all over the country, where stuff that they would have gotten an offer on, you know, several offers within the first weekend are now sitting for 1 week, 2 weeks, several weeks without any offers.
Which is funny because, you know, not too long ago, you'd get 10, 20 offers on that same property and it would be a frenzy.
Which is, I mean, it's fine, right? Like that's how it was. Like when I first started flipping houses, 2018, 2019, I mean, the first few properties I listed that I sold, the expectation was it would sit for 30 to 60 days. You know, you kind of like work that into your calculation. So what we've been dealing with over the past little bit has been completely unprecedented in the history of flipping houses. But, you know, that still doesn't make it like, it's amazing how quickly you adapt. And
I know. You're like, what's wrong?
I know. When this last one listed, I mean, after like 4 days, got through the first week and we didn't have an offer, and it was like,
yeah,
like, this isn't good.
Yeah, I had maybe like 4 showings total, and we actually did get 2 offers out of those 4, and one was over ask, but it came in late, and we'd already accepted another one that was a much stronger offer, just less than we wanted to accept.
Yeah, well, the one they said that was over ask, it was like an FHA with 20% down, and there would definitely be some FHA questionable things on the house.
No. I think we fixed it because we were targeting FHA buyers on this place,
really?
right? I was anyways during the rehab. I was targeting making sure that we kind of stepped through the hoops on a certain thing. So it'd probably pass, no questions asked FHA. We even put hot water tank straps on it. You can believe that.
You gotta leave that though. You always gotta leave that. So
I know.
Can justify the cost. They gotta have something.
The TPR valve was like 9 inches off the ground, which is it's supposed to be like 3 or something. I don't remember. So we left that for him. You know, we'll give that inspector something. But yeah, we did. But it was like a weird. I don't know why. Maybe it was just the timing of when they got their rates looked at that an FHA would be better than conventional. I mean, you don't usually get 20% down.
Yeah.
FHA.
Well, I think FHA is typically a little bit cheaper. Even if you put more down on it. I don't know. I've never gotten an FHA loan. I really looked into it.
Yeah, I don't know that you would. It might. Who knows? I guess with that, I would typically not think that would be the right way to go. But that's what they thought, and so yeah, we missed. They came in late. We already accepted an offer. We negotiated a price the night before that, which I'm happy with. If they come back with a bunch of repairs, it's going to be like, really, come on, guys.
Yeah.
Not going to happen.
Yeah. Well, I mean,
so we'll see how.
Yeah, and the higher offer too also justifies that if the people do come back and want a bunch of repairs, we can just be like, nope, we have this other offer, and we have justification that somebody will pay more for it. So, you know, if anything, if they come back with repairs, we should just counter with a higher ask, like in exchange for repairs. Honestly, we could be like, yeah, we'll do that, but we want full price, and we'll take care of all that for you.
Yep, totally. Yeah, I think the only repairs they could come back with was questionable would maybe the roof. It's a 3-tab shingle roof. You know, sometimes people don't like those. Inspectors will say, "Oh, it's only got 3 years of life left on it," or something like that.
They want us to redo the whole roof. Yeah, they can F off. Let's bless it again.
Yeah, exactly. That's the only major inspection. I'm like, we'll see. But it looks clean. It's clean enough for me. So,
Cool.
but yeah, you're right. I mean, things are changing on all the markets,
Mm-hmm.
right? I mean, I don't think that real estate. The question is, how much will what we're seeing in the broader economy bleed into real estate? Obviously, we're seeing people. It's the buyers are slowing down, but they're still there, right? We're still selling properties. But you look at things going on, it's kind of funny because we get a strong jobs report basically, and then that reaffirms the market belief like that the Fed's going to raise rates again because now they've got good strong jobs. They're still trying to get inflation under control, and so now you see the broader markets kind of dip again after they had a little bit of a bump, like was that last week or whatever. So that to me is just indicative of like a bear market, and everybody's getting kind of nervous on the rates going up because that's going to affect things. And so that's what the markets are reacting to. That it's kind of funny how it's these nuances, how the market reacts. And then you can see companies starting getting more defensive strategies. Tesla, this is, I follow them quite a bit because I just like the company and what they're doing, and a little bit of a fanboy. Elon Musk sent out an email saying that everybody had to be, this is what I also laughed too, because he said everybody had to be in the office at least 40 hours a week. And I have some friends that work for companies that Elon owns, and 40 hours a week is like part-time at his companies. Like they grind, like they freaking work on the in those companies, SpaceX and all that sort of stuff. But then that was indicative, what people thought was indicative of him saying that they were going to cut jobs. Because people would naturally just be like, I'm not coming back to the office for 40 hours a week, or I can't come back to the office 40 hours a week, and they'd leave. And then there was another email sent out to the company that he was worried about the economy and that they're going to do a hiring freeze. And so and then you're starting to see other companies cutting a little bit of staff or doing hiring freezes. So, people get scared, but it's like they're getting in a defensive strategy.
Yeah. But I mean, when you look at like those sort of companies, you look at where like they need to be worried because they make so much of their money off of their stocks, right? And like doing the buybacks and those sort of things. I mean, Elon Musk's whole fortune has come from the unprecedented rise in Tesla's stock, which is completely unjustified if you look at their earnings, right? So I mean, for him to be a little bit cautious makes sense. But if you look at like the everyday person, the problem with the sort of economy and how it's sort of presented to people is, realistically, for most people, what the stock market does on a day-to-day basis does not and should not affect them, but they act like it does. Thanks to public media and, the ramblings of people on social media that make things look like a giant deal. Like, unless you're retiring or, you're living off of your stocks or something like that, what the stock market does, if it dips, all it really does is create a buying opportunity for people. But people act like it means that they shouldn't do anything in their life because their stock portfolio is dropped. It's like, if you're honest,
this is the time to be taking action,
it is,
man.
Right? And
this buy opportunities.
If you're looking over the long period of time, exactly, it's an opportunity to start generating more wealth for yourself. But typically what people do, because they're foolish, uneducated, I don't know, is they freak out, they sell, and they sit on the sidelines. They don't do anything. And it's like, this is, the time to start making money. So like, I think it's Charlie Munger that he would say is, be greedy when others are fearful and fearful when others are greedy. Maybe it was the other way around. But I mean, that's exactly what we're in right now. Everyone's fearful. Now's the time to start being greedy. Now's the time to start, buying assets and doing all that sort of stuff. And even on the real estate side, we've seen it even on a wholesale front, as we're looking to offload some of the properties that we're looking to assign. The buyer pool is suddenly much smaller because people are concerned about it, right? But if you look at the fundamentals of real estate as a whole, if you're buying it at a large discount, you should still be fine, even if things, you're buying a property at 25% discount. Even if real estate drops 25%, you're still going to be breaking even.
Yep, you still got a property. You still have an asset.
Exactly. And the supply and demand is incredibly skewed still, pretty much everywhere all over the country, especially locally here in Spokane, where the demand is still high, even though stuff is taking a little bit longer to sell. There's still a large buying pool, and there's not a huge amount of properties on the market, even though it's slowly increasing.
Yeah.
I mean, there's still a lot more demand than there is supply for it, right? So, I think that chances of a big decrease in hard assets is probably kind of low. And stocks is going, things have already dropped, but that just creates a buying opportunity. If you want to get into things like crypto, who the fuck knows? Like the only thing that's really come out of that is, oh, your thing that was supposed to be a hedge to the normal economy, how did that work out for you when it tracks with the stock market 100%? You know, it's like,
I know. All the, you know, there could be some conspiracy here too, that the Fed, that the government wants to pop the crypto bubble. They don't want that, right? And all the crypto bros out there talking about that hedge, like you just said, it's like, that is not true. There's no, they're like, but the data, if you look at the fundamentals, I'm like, what fundamentals? The fundamentals of crypto versus like the S&P 500 are minuscule. The fundamentals of crypto are like a blip in time. And we're seeing that happen. I mean, I'm not saying you shouldn't invest in it. I mean, there's a lot of people investing in it, but it's like, you should diversify. And that's where people have problems, is they think that the asset they're investing in, because it's doing great now, is always going to do great. And that's the one golden ticket. And you found it. It's like, there's a time where you should scrape some of your profits. You and I do that in real estate. We sell certain properties, take that equity out of it, repurpose it. Same thing with your stocks. There should be, you should take some of your wins, kind of like at the casino, you know, throw a few chips in your pocket and then keep gambling. I mean, that's what you should do. You got to take your wins when you can. And yeah, you might lose some of the upside doing that, but over the long term, which again, I always preach this, real estate's a long-term investing game. You know, over the long term, you're going to be better off.
Yeah, for sure. And, you know, crypto stocks, if you believe in any of those things, now's the time to be buying. And then, you know, for real estate, you know, if you do think a crash is coming, which I don't think it is, just like I said, the supply and demand, but now is probably the time to be hoarding cash for that, or to be stabilizing your properties so that if things do get a little bit sideways, then you at least have the best possible asset that you can. Like on all those things, I would say if you own kind of shitty companies, if you own those random altcoins that don't actually have any value, if you own like really dumpy properties, maybe offload those ones and start moving into the more desirable assets that other people will want to have in the future. You know, it's like I would say these sort of periods is when it's less appropriate to gamble on things that don't really make sense long term, like you said, because investing at its core is a long term game, you know, regardless of what you're investing in. So,
and you got to remember that, you know, the economy doesn't just stop. Things tighten up and things are correcting. I believe that they're correcting right now. You know, you're looking at the stock market where we took some unprecedented gains in real estate, stock, crypto through 2020, 2021. And if you just look at the graphs, you're like, wow, that was a lot. And then now they're correcting back down to like those pre-pandemic levels almost is what it's looking like. So it's like, is it really that bad? Maybe not. Maybe we just had a lot of excess dumb capital in the markets, which we printed a bunch of money, which also, you know, and you heard all these people getting their stimmy checks and investing in the stock market. Like that was all over the news. Like people had excess money. They're doing stuff with it. But I think, like I said, the economy is not going to stop. Flippers are going to flip, buyers are going to buy. So there's still opportunity out there. So if you're a flipper, are you just going to stop? Like if that's your full-time business, like, no, you still need to make some money. You're going to tighten up. You're going to buy a little bit better, as we're seeing people are getting a little bit more cautious on what they're buying. But there's still money to be made, and there's still opportunity to go out there and invest. And you just have to do that. And I look at it as like the dollar cost average method. Like we're still buying, we're still doing things. We're closing on a multifamily, today?
Yeah, I called them before. I think I'm going to be signing today. So it'll probably be funding on Monday. But
yeah. So, I mean, you know what I mean? Like we still got good fundamentals on it. It works for us today. It's going to work for us tomorrow. Those sorts of things, those are the opportunities where you're going to gain wealth.
Yep. So yeah, I mean, you know, ultimately I think it's just key to find the key people that are going to be able to keep things moving. They're going to want to keep doing business through these times, because this is what sort of separates the men from the boys, you know, is these periods of time. Like you look back to 2008, 2009, and they're in the last recession, the people that were taking action then, they made generational fortunes, right? Whether that was in real estate, that was in tech, that was in, you know, their own stock market investing, right? Those sort of things. People that doubled down, they did extremely well for themselves. And, you know, this will be no different. Even you look back to COVID, like when everything kind of tanked at the start of COVID, the people that doubled down and bought a bunch of things at the bottom of that, they made a shit ton of money over the last 2 years.
Well, yeah, we know guys that were saying they pulled back, right? And that's kind of when we really doubled down. We were just starting out doing this full time, and we made some pretty good gains while other people stepped on the sidelines and then had to pivot because people like us came in and took over the market share.
So I actually remember hopping on a local RIA meeting, a real estate investment meetup in Spokane that was all done over Zoom because COVID had just started. And one of the big wholesalers in town did a whole talk about how he was like laying off all his staff and they were going really defensive and they were doing all these things and really stepping back. I remember you and I, we were just getting started and we were like, well, like, what do we do? I don't know. And we made the decision, just double down and see what happened. Yep. And I don't know where he is anymore. He's certainly not doing the deals like he used to.
He's not doing. Yeah, he's not. He was doing a lot before.
We're doing pretty well. So, it's interesting. And, ultimately it just comes down to buy quality assets, expect to hold for a long period of time. If you have anything that is sitting on like a fat gain still, maybe look at exiting that and diversifying a little bit more. But if you do believe in it, don't fret. And if you put yourself in a position where you have to liquidate that, honestly, shame on you. You kind of overextended when things were when everyone had been talking about when is it going to happen for the last 6 months, you doubled down and said, screw it. I'm going to throw all caution to the wind. And that's sort of on you at that point. So.
Well, yeah, and if you believe that there's some fragility, so your brain is saying, "Oh, I got to be careful. There's some fragility." Well, we're in the game where that can benefit you, right? Because there's going to be more distress. If you're worried that things are going to get worse, over a period of time, well, that means there's going to be more distressed sellers in the marketplace.
Yeah.
And the more opportunity. Now the exit, you've got to make sure that you're appropriately acquiring those contracts at the right prices. Don't buy them at yesterday's prices, right? You need to buy them at the future prices and what you expect them to be. But that's also talking about sellers. This is a transitory period for them. They're not going to be as quick to react. They think their house is still worth $1 million, even though it's a piece of crap and they're about to lose it. But they saw their neighbor 6 months ago sell their house for $30,000 over asking, $100,000 over asking. And they're, sellers in general sometimes can be, I don't know, what's the right term, Mike? What would you call them? Sometimes
they tend to have rose-colored glasses on their situation, right? Like they see the best in whatever they have, and they kind of ignore the realities that are around them.
Yeah. And oftentimes they can be somewhat ignorant to like what the actual world's doing. Or I always say like they take inaction, which is why they're in their distressed situation, because they weren't able to take action for whatever reason. And they kept digging themselves in a hole and they don't see that and they kind of get defensive or whatever, but they become a challenge. They can be challenging to deal with. And now that we're in this period of time where, as the investor, as the buyer, that yesterday's price that they could have gotten does not work today and it's not going to work tomorrow. So you have to go in there and deal with this and learn how to deal with tough sellers, really is what it comes down to, because they're only going to be tougher in this next 6 to 12 months.
And there's a lot to that, dealing with these sellers. And I think that this time looking at, if you're looking at real estate, if you're predicting things to sort of go down, or that there are these people that are over leveraged on their properties, this is something that we've been talking with people in our instant investor program about, is sort of positioning yourself for these changes. A number of people have asked about what we think they should do to sort of prepare for changing the market, and positioning yourself with, knowledge of the market, establishing your brand as a business, establishing your reputation as an investor. So that way, when all these sellers do come around, they're more willing to work with you because you have more of a presence in your local area. And not only that, but educating yourself on how to deal with some of these difficult sellers, like you mentioned, and overcoming the situations that they will probably come with. So many of these sellers these days come with different kinds of baggage, and it's only going to get worse especially over the next little bit, where you're now dealing with, they have this personal, mental, emotional, family, legal, whatever baggage, along with their misguided beliefs and what their property is worth and what's going to happen in the future. You're going to encounter a whole bunch of issues and situations with that. So that was actually what we're going to talk about for our educational piece today, as us and several people in our instant investor group have been dealing with difficult sellers recently. So really quick, I'm going to do a little read for the instant investor program, and we'll be right back. The Instant Investor Program is our 12-week group coaching program, which includes a self-driven course and access to our private investor community. We will take you through the full process of how we find our leads, how we market, how we do our sales and follow-up, and how we determine the best strategy for every opportunity that comes our way. On top of that, you will also join a community of other like-minded investors nationwide that are all marching towards the same goals, and you'll have direct access to Dan and myself so you can continue learning and growing with us as we continue to adapt and grow our business. So whether you're a new investor or already established, our systems can help take you to the next level. So if you think you might be a good fit, go to theinstantinvestorprogram.com and schedule a call, and we can have you talking to motivated leads in as little as 2 weeks. All right, welcome back. That was perfect. A little break there. Took a call from the title company, so I'm going to be signing for that 6 unit we just talked about at 2:00 today.
Yeah. That's a difficult seller.
Exactly. And this is actually what we're going to lead with. Was this seller in particular is a difficult one that we've been dealing with, and so going into how to deal with these difficult sellers, it's kind of a wide ranging topic, but there's a lot of different takeaways you can get from these different situations. And there's a couple different kinds of difficult sellers, right? Like there's ones that are difficult by temperament. There's ones that are difficult by situations out of their control. There's ones that are difficult because they're just difficult people, right? And they're just kind of ignorant to their situation. Especially with older people, we find some of these challenges to come up frequently if they're, I would say, crotchety old men. And this one in particular, so we got this place under contract in February. It is now June 3rd of 2022. And he wanted to wait to close this thing until June because he wanted to collect some more rent because he was getting like subsidized rent from the government. And he wanted to drag it out basically so he could make some more money. We're like, that's fine, whatever. We're buying this. It's a 6-unit property that's worth probably $850. We're buying it for $625. We're making off like bandits. Like, we'll do great. Literally last week, I'm in San Diego with a couple friends, and I find out that this dude basically, so we had to get an appraisal on this property for our loan. The appraiser called me and he basically was like, yeah, so this guy isn't going to let me into the property. And I was like, what? Why? So I gave him a call and spent 20 minutes in the parking lot of a Mexican restaurant in San Diego on the phone with him, just talking about like, why aren't you going to work with the appraiser? Like, you are literally a week away from $625,000.
Yes.
And you're going to let 15 minutes of work get in the way of that. And he was just like, yep, I don't see why I have to be involved. He literally said, this is not a part of my contractual obligation to you to have to get involved with this. And I was like, how about if we do it? What if we send our guy out there to meet the appraiser? We basically have to just get your permission, because otherwise the appraiser isn't going to work with us, isn't going to allow, do this whole situation. We can send our guy, you don't have to do anything, and we'll do it. And he's just like, nope, I'm not going to let you disturb my tenants because I don't want them to not pay me rent for June. I'm like, it doesn't matter.
He's so afraid of his tenants.
Yeah, he's so afraid of his tenants. Like, it doesn't matter because we're going to buy it. If they don't pay rent, it's going to be our problem.
Exactly. Yeah. He is like, I guarantee that's exactly too. I know when I walked the property with him, he was so afraid of his tenants. Like, he wouldn't even go in the units with us. He was just difficult. I mean, that's what you deal with, right? Right at the last minute, the final hour.
And so what we ended up having to do in this situation, and this is why, when you deal with these tenants, the thing that sucks when you're the investor, and this is something that a lot of investors, I think, struggle with, because, you have pride, you're trying to make money, looking at your bottom line, that you're in the right, but you have to recognize that these people, they don't necessarily care. And so honestly, when you get situations, you're going to have to eat shit a lot of times. And that's exactly what we're having to do. Yeah. So to close it, we were getting a commercial loan, which is going to have way lower costs. It was going to allow us to start off not having to refinance. We're going to have, a lower payment. Instead, we had to go and get a hard money loan to close this deal. The whole process is probably going to cost us about $5,000 to $6,000, even though we're only going to have this hard money loan for 2 weeks, if that. And now this dude is costing us a bunch of extra money for no reason other than the fact that he's just being an ignorant old bastard, And when it comes to dealing with sellers like this, you have to approach it with a position of being firm, but fair, right? And like realistic, and understanding that you're going to have to be infinitely flexible on what you're going to want to do, on what you're willing to do. And I always say you always got to have a backup plan for your backup plan, so like our backup plan for if he didn't want to cooperate was, okay, cool, then we will do it. Like, we will facilitate it. 99% of the time, sellers are cool with that. They just don't want to have to be involved anymore. Our backup plan to that is like, well, we go and we get a hard money loan that I know we can get because we're buying at such a discount and I have the relationships to do it. And that's kind of the last plan. But having those backup plans as you're going through the whole process allows it so that you get as many deals as you can. And then buying good deals allows you to have the flexibility to have to make these pivots and pay the extra money or do whatever you need to do. And it sucks. It's going to cost us $6,000, but we're buying an asset with a $225,000 spread and something we're planning to hold for the long term. And I was doing the math this morning. If this property now grows at a reasonable rate of, was it 4% per year, 3 or 4% per year over the next 5 years, I think it's going to be worth over $1 million. Right. So our return's ridiculous. And tell you what, when we sell this thing for 1.1 in 5 years, I'm not going to give a shit about $6,000.
Yeah. No, I'm going to send the seller an email and be like, thanks.
Yeah, right. So,
like, thanks for being a jerk, but it didn't hurt us too much.
Exactly. You know, and it's kind of a challenging situation. So one of the guys in our instant investor group, we had a meeting, our group call last night, our weekly meeting, and he was talking about kind of a similar situation where he had a package of 5 deals with this seller. The seller was kind of squirrely and was like doing all this weird stuff, right? So he knew it was going to be weird. His lender, his hard money lender, was requiring him to get an inspection on these properties because they were completely unseen. Like, he hadn't even seen them yet. Our student hadn't. And he showed up, the inspector showed up, and the seller was like, I guess like the inspector started to like open up, you know, the utilities and like looking at shit that an inspector looks at. And the seller freaked out and was like, nope. And kicked the inspector out of the apartment, not of the apartment, out of the unit, you know, and said like, we're not going to any other ones. We're not doing this transaction anymore. We're not doing any of this stuff. And basically create a huge fuss. And then to make it even worse, what he started trying to do was drag out the transaction after that and was refusing to cooperate with our student because our student had put $10,000 in earnest money. So this seller was now like, if I drag this out and we go past the contingency phase and we don't cancel it, I can steal the student's money.
Right. Yeah.
Right.
Yeah. Total seller move on that part.
Total,
like,
right?
Be irrational, completely irrational. But the best part about it is this guy's still trying to re-engage with our guy. And see, and so the deal's not dead.
Exactly. And so that's one of those things is we were chatting with our students, name's McKinney, and we were like, well, you have different things you can do here to try and deal with this guy, like different kinds of funding you can look at. Maybe you can try to wholesale them sight unseen if it's a good enough deal, like try to drop the price and say, you know, hey, Mr. Seller, like, if you're not going to let us into it, that's fine. I just got to be at a 30% discount of what you're saying because I'm going to be expecting the worst, you know, and all those things, like there's tactics you can do to get around them. And then the backup plans are, you know, you try to wholesale it sight unseen. You try to find the key buyer in that market that wants those style of properties and can move it. And the funny thing is, he thinks he already found that guy, he was saying last night.
Yeah, he did. Yeah,
he said he had a guy that was super, super interested and was willing to buy all of them. He was going to make like $50,000 across all these properties with his buyer. And the guy was like, well, can I just get like a basic look at them? Like, I don't even need to do like a full inspection. Can I just do like a walkthrough on a couple of them so I know what I'm walking into? You know, and I was like, there's your negotiation, right? So now you have an exit that you know exists. What if you go back to the seller and you say, hey, if he can go and walk through 2 of the properties, my guy out there, he's not going to do a full inspection. He's just going to go take a look. Right. You get into the guts of it.
Make sure that the house exists, that there's 4 walls, that, you know what I mean? And that's fair. You're trying to sell a property, right? Have that conversation. Like, that's all we want to do. We just want to make sure the property looks like what you say it looks like.
Yeah. So, you know, there's always different strategies and you have to have that flexibility. And I think a reason that a lot of people end up stuck on the sidelines is the first time they encounter any sort of resistance or they encounter something where they feel like it's not fair for them, they lose it, right? And they're like, I'm not going to move forward with this. And the thing that sucks is, sure, it's not going to be fair for you, but if you want to make, you know, a couple $1,000,000 a year or in the future, because you're buying this property at such a discount, don't worry about the little details. Honestly, if you're buying right, you're going to do well. Exactly. Even though it really sucks at the time, just let it go. You know, that if you have the long-term.
There's been so many times where we've had to deal with that, where we had certain desires with a deal that kind of goes sideways and we still scrape something out of it. It's just not what we wanted, but we're still producing revenue. We're still producing income. We're still doing deals. We're still buying properties. I mean, the 6 unit you just talked about, we're going to have $7,000 more in cost. Do we want to do that? Absolutely not. There's been other deals where we should have made way bigger fees, but we had to take a right turn and make half that. But you have to be able to pivot and don't feel like the deal is dead just because all of a sudden the seller's acting that way. Because I would say more often than not, sellers act somewhat irrational at some point during the transaction.
All the time. And even when things seem like they're going well. I know we just got a crappy review on our Google because we had this guy like right before closing, he suddenly came out and said, well, I'm not going to sell now unless it's for $100,000 more because the market's gone up. And we're like, well, that's not going to happen. And, he was beating around Judd a little bit. So Dan called him and basically was like, hey, you got to sign these documents or we're going to sue you. And the guy got super pissed off and like went on this whole tirade and all sort of things. And, we could technically pursue it, but it was such a small deal. It's like, it's not really worth it. It's like, it was like a $7,500 fee or something like that. And it sucks because I feel bad for Judd because he's put in literally months of work on this deal and it's gone.
It's been a pain. Right. It's been a very irrational seller, the whole situation, right?
And things that could have maybe potentially avoided that, we could have been proactive on some of the parts earlier. There's a lot of things that we're like waiting on people that we could have probably pushed a little bit harder. We could have also maybe been more open with the seller on listening to like his needs and concerns, because there was things that came up kind of at the last second as I was reviewing the notes. I was like, why did we not know that earlier? And at the core of it, when it comes to dealing with these difficult sellers, you have to listen to them and help them solve their own problems, right? Because a lot of stuff you can't necessarily do for them. You can like facilitate some things, like we have one right now where the biggest hiccup that I imagine we're going to have is the seller is trying to figure out how to move and like where to go. And if we can facilitate that, it's going to go from us being a week out and the seller becoming extremely defensive because they are about to have their house sold that they're living in, to, like, oh, we're providing a service. We're helping them out. We are listening to them. We are solving their problems and we'll be able to, do the deal and make some money. Right.
Well, I think this is the key to solving their problems. And one of our other students, while we're having this conversation, brought up like a lot of times we like to go with logic and numbers, and some sellers really like you go down that logic path because they like it. But then if that's not working for you, flip to the emotion side of things. Start selling them on the emotion part of like what they're going to get when they sell their house, or the relief that they're going to get when we can do this. And when you're saying solving their problems, if moving's a big one, we generally speaking can help people move for a pretty low cost if that's what it takes. If it takes finding them a place or getting them help to move because they just don't have the facilities to actually move their junk that they have there, relieving that stress, that emotion that they're feeling tied to it, and understand that where they're at, see the deal through their eyes.
Yeah. And those things are the keys to modern day off-market real estate investing and wholesaling. And this is one of the reasons I think a lot of the people that were doing very well in 2015, 16, 17 are no longer around. It's because back then you could just find like a family or like a couple that had a house and they're like, yeah, I'll make less money on my house because it's easy. And I need to be able to move in this other place and the market hasn't increased an incredible amount. They probably had like a roof that they knew they were going to have to sell, the repair to be able to sell. They probably had these situations they knew they had to do, but over the last couple of years, we haven't had that. Like people would buy things with crappy roofs because they had no choice. Right. And so now the modern method of doing that is you have to, like, those people are gone, the rational people, because they end up for other options. So you end up stuck with only the people that come with that. Right. And so at the end of it, it's not really a real estate business. It's a people business, and you're providing a service to your sellers. Right. And that was something that was interesting that was said on our call last night too, with one of our newer members. He was like, we were kind of going about this and he goes, how come you do it that way? He's like, I always kind of had the impression that wholesaling was just getting the biggest spread you can on a property and making money. Like it is, but now in order to do that, you got to provide outlets for people because they're going to always come with something, whether that's going to be working with their lawyer to solve a probate or help get through their divorce, or dealing with like conversations between kids they're trying to figure out to do with their mom's house, or helping people move because they need somewhere to live, or like it's endless, the different situations that come up all the time. And I would say it's almost every single deal these days,
absolutely. And
have something like this that we have to overcome.
at some point you got to remember that it's not about the piece of property. It's not about the structure. It's about the person and the things you're going to solve for them. And that's where you're making your money. That's that service you're making your money on. It's people, you lose sight of that too easy because your numbers, you're looking at the deal, you're looking at the house, and you forget about the person.
Exactly. And a lot of people don't even realize that if they're OG investors. We just released a YouTube video on our YouTube channel, The Mike and Dan Show. You guys should go check out, where we talk about this recent podcast episode. We kind of light up this guy named Jamil Danji. He's a OG wholesaler, and he spends his entire bigger podcast episode talking about how all wholesalers do is rob grandma. And I was like, maybe that's what you did like 7 years ago. I was like, I mean, now even if we wanted to, I couldn't rob grandma. Like, there's no grandmas to rob.
No, no, exactly. No, you're absolutely right.
They have too much baggage, you know? So like, there's too many things in the way of the transaction to make that even a possibility. So, you know,
well, and if you're out there, you're negotiating and the seller's difficult, like, just have some, you know, some comfort in, like, that's how it's supposed to be. It's not just you. It's just not your seller. And that's where you got to sharpen your steel right there, is get your knife edge sharp with your sales skills. And remember, you're looking at the person and providing them a service, and how can you provide that service to them? That's where your profit's going to come from. And that's how your profit increases.
Yep, exactly. So, you know, I guess full circle, dealing with difficult sellers, the keys are going to be listen to them, figure out what their concerns and their problems are, and have strategies to overcome those. Be prepared to eat shit if you need to, because if you're buying right, you're going to make way more money that it's probably not going to matter. I mean, obviously be within reason. If it's like a $50,000 difference, that's a little questionable. If it's like a $6,000 difference and you have a $200,000 upside, like just pay it. It doesn't freaking matter.
Just eat it. You know? Just eat it.
And then I think as you're going through a lot of these situations with people, a good way to approach it, I guess how we've always approached it, is if this situation was on the front page of the local newspaper, would we look really bad? And if the answer is yes, then we probably shouldn't do it. Or if this seller was our grandma and somebody was trying to do this transaction in our shoes with our grandma, we'll be pissed off at that person. If the answer is yes, that means we should probably not move forward with it. So anyway, it's part of the game. You'll get used to it. It's a, you know, part of just the off-market game in general is just dealing with these challenging people. So anyway, make sure you follow us, like and subscribe to the podcast is always great. Go and download a bunch of them, because the download numbers are huge. So go and like create like a new account on iTunes and just download all of our podcasts to boost our numbers and our rankings. That would be awesome. You can check out our website, collectingkeyspodcast.com. If you go to collectingkeyspodcast.com/calculator, you can get the calculator that we use to analyze all of our deals and do all of our renovations. And it makes it super easy if you're getting started and you kind of have analysis paralysis. And besides that, our mastermind group is slowly starting to grow and take off. So instantinvestorprogram.com, go there and schedule a call with one of us, see if you'll be a good fit. Then besides that, is there anything else that I missed? I think we should be good.
No, I think that's it, man. Yeah. Let's sign out.
Thanks, guys.
Investor Man Dan with Heavy D pulled that one out of the archives. I haven't heard that one in a while.
Not since I've lost a bunch of weight from college. You bring me back to my dark ages. Thank you for that.
Yeah. Me and Heavy D are over here, doing our thing. But yeah, let's get out there, talk to some sellers.
All right.
Listen to them, collect some checks.
Heavy D and Bald Man Dan sounding off.
Come on now.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.